Hey guys, what's up? Welcome back to RoyalBluFX. Today we're going to talk about why you don't need to use the Wyckoff, and we're going to talk about a better method to use instead of the Wyckoff. So without any further ado, let's get on with the video. Alright, so many of you guys know about this Wyckoff theory, right? It's called the Wyckoff Schematic. So if you guys don't know, I'll show you where to look, where to find it. It's right here. You just need to go to school.stock, or just go to Google really and just search Wyckoff, and you'll see it right there at the top of the page. But the Wyckoff theory really is just a theory. It doesn't, a lot of people are trusting a lot of the Wyckoff's theory and the strategy, and it works for some, doesn't work for some, but the whole reason behind this is why I'm doing this video is because it's a very confusing theory for a lot. Actually, and so we're gonna break it down and show you why you don't need the Wyckoff, and how our theory works better than the Wyckoff. So here we go. When I'm recording this video, I'm assuming everybody kind of understands the basics of Wyckoff, right? Like there's the accumulation and then there's the distribution part of Wyckoff. So what I'm going to be showing you guys here right now is pretty game-changing and pretty powerful. Like Wyckoff, when let's talk about in terms of the accumulation schematic. So when prices are going up, right, and then when the Wyckoff starts to form, all right, there's that part of where price just breaks below a low and then all of a sudden starts to push up and then break above the highs like this, right? We call this area here, this area right here, the spring test, and then after that, price starts to, do what's called LPS, which is the last point of support. Then you have what's called the spring here. Sorry, not the spring. You got this area over here called the SOS, the sign of strength, right? And then all of a sudden, price just shoots up from here. But anyway, I'm going to show you guys why you don't need the Wyckoff. In every form, let me even show you guys, before I even show you, let me show you what I'm talking about so you guys understand here. You see how the Wyckoff builds up, right? You got the PS, the SC, AR, ST, STB, and then you got the spring here. All right, see how the spring breaks below the slow, and then all of a sudden price just breaks above, right? And then this is what I'm going to talk about. I'm going to talk about the spring specifically. So let's look at the chart here. I'm going to show you how price works, how this Wyckoff thing works. All right, so when you have, let's say, if you're looking at, we're on the 4-hour right now, you're seeing prices pushing up right now, and then every time an area pulls back to, let's say, an order block, right, like right here, you can see there's an area of liquidity right here, and then price all of a sudden takes out the liquidity from here, from these lows, and then targets an order block from here, and then price starts to shoot up, right? So when you're looking at this area here, you can clearly see the Wyckoff. It's not a bad thing to use the Wyckoff when I'm trying to say that there's just a better way to use this theory, and the way I see it is very clear. Like any market, right? At this point, the market's going down at this point, and what we're trying to do is catch the reversal price going back up. We have this thing that we call the CHoCH, or the CHoCH, depending on how you guys call it. But right here in this area, you can clearly see where price falls below. Price breaks below these lows, and all of a sudden price breaks above these highs like this. This is what we consider the CHoCH, or the CHoCH. It's spelled this way, like this. All right. So what I tend to do is normally, if I'm looking for a buy here, I normally have to see a price break above the highs, like this, and then you have to have a low and a high break. So in this case, we would see a area first. If it's an uptrend right here, price has to fall first. It has to break below, like this, and then it has to break a high as well, like that, in order to consider this a CHoCH. And then once price comes back, then you can obviously wait and wait for the market to come and touch your order block, and then you can buy from here. Now, this works everywhere. Notice again how this area here is the spring. Is the Wyckoff. So it starts from right up here, I believe. We got what's called the PS, the preliminary support, and then you have the selling climax, the SC. You have the AR, and you have the ST, secondary test, and you have the STB, right? And then you have the spring, which is right here. Spring test, right? Something like this. And then you have what's called the LPS, and then another LPS right here. Oop, right there. Okay, and then lastly but not least, we have the SOS, which is the sign of strength right over here. And price has to actually break above the highs. Should be right here. Okay, so this is what the Wyckoff looks like right now. This is why I'm trying to tell you guys don't really need to know the Wyckoff. I mean, you can. It's not a bad thing to know, but it's just so much information and so much noise, right? So a lot of you guys can actually, you might actually get confused by understanding where, you know, where all the, you know, the letters have to go, right? Like right here, PS, SC, like I had to kind of look at a bit just to kind of really find and understand where all this information is, right? I mean, if you understand sort of the movements right here, right? The PS and the SC, the AR, ST, right? And, you know, you have to understand that, you know, ST can't go below SC or AR can't go above PS and all this stuff. And so it gets a bit confusing, right? But like I said, a lot of people have their own versions, so it's very hard to identify what is the Wyckoff, you know, specifically, right? So, but normally, this is why I come down to the conclusion of the Wyckoff. Normally, when price falls below like this I know is considered to be the spring or the test, and then I know for a fact that price should push up. But that's not why I know that price should push up, right? There's a whole meaning behind, and a whole understanding behind why price is shooting up. It's not just because the Wyckoff schematic is producing or it's you know, developing. All right, and we're going to talk about the CHoCHs later in another video. Why this actually tells me that price should push up from here. But maybe, in long story short, to kind of give you guys an idea why, you know, price is actually reversing. It's showing a change of character right in this area. Therefore, it's showing that price is very weak. You know, the downside here is very weak, and the price is just changing direction from here. This is the first sign that price breaks above the structure, and then price is pushing up. So that's how we know that price is actually reversing. Let me show you guys another example here, if I can even clearly see the Wyckoff, because sometimes it's hard to see the Wyckoff develop. I can tell here for a fact, I can see the CHoCH here for a fact, okay? So we had an area where price broke below here, and then we had a price break above the highs right there. So this is my signal and my sign that I know that price should be pushing up from here, right? Here's the order block, and then there's your buy right there, all right? And just, obviously you can see price just pushing up, okay? But let me just kind of, again, show you guys why the Wyckoff is so kind of hard and very noisy to find. Like right here, it's hard to actually know where the you know, preliminary support is. It's not here. It's you see, I'm even having trouble finding it. It might even start from here, for all I know. Maybe like right here, PR. Right, you got the PS. What is it again? PR, SC. You got the SC, right? Then you got the AR. And you have the, you know, ST right here. And you got what, maybe the STB here, which may be inaccurate, I don't know. And then you have normally the spring should be lower below all these. Maybe STB is, maybe it's right here actually. ST, and you got the STB, and then you got the spring right there. All right, so see what I'm saying, guys? It's very complicated to see this very clear. Then you got the LPS here, which is actually right here. LPS, right there. And you have another LPS. All these are LPSs, obviously. And then, you know, how do you actually identify? Because how do you identify the SOS, right? I mean, look at this. It's a whole mess. I can't clearly see where the, you know, where the SOS is here, because the SOS has to actually break above the AR in order for it to be SOS, a sign of strength. So technically, we would need to wait for price to actually get over here, break, and then look for buying opportunity. But that's not how it's done. That's not what I see clearly here. And normally, again, like I said, the right here, the ST can't break below the SC. You know, the AR can't break above the PS. So it's very suggestive. I mean, it's very suggestive. It's a theory, right? This is why it's a theory. Let me show you guys a few more examples on how this works. Again, I'm seeing this as the potential spring or test area, just because, you know, price breaks below the last low and then price starts to break above. So this would be like, you know, the SOS here or something. Yeah, maybe it's hard to even identify all this as the Wyckoff. I can't clearly see the Wyckoff. You know, I've been talked to, people have been talking to me about it, you know, and I've been seeing their sort of their areas of how they identify the Wyckoff, but, you know, everyone has their own versions. Like right here, maybe this is where it starts again. I mean, I don't know. It's hard to even say. You got the PS here, maybe the SC, the AR, you know, then you have the ST, the STB, then maybe the spring here. And I've seen something like this before with other people, but, you know, I can't fully vouch for them and say that this is an actual Wyckoff theory. But again, let me just delete all this, and so you can see, right, there's a low broken here, there's a high broken there, and then what do you see all the way down here, right there? There's your buy, right here, right? Price shoots back up, okay? This is what we call the CHoCH, okay? CHoCH breaks a low, breaks a high, in order for it to work accordingly. So just a little bit about the CHoCH though. So this is the new method, right? It's the CHoCH. So the way the CHoCH works is essentially this way. I'm probably going to do a better video than this, but I'm going to show you how it works. When we're going on an uptrend like this, okay, the CHoCH only works when price has to dip below a low like this, all right, and then price has to break a high like this in order for the markets to come back to an order block like this, and then to push price back up. So for an uptrend, price has to break below and break a low and break a high. Okay, for a downtrend, price actually has to break a high and then a low. So when price is going down like this, price has to break a high and then a low, then price has to come back to that order block like this and then push down. Okay, so that's what I typically look at in markets, and in terms of why you can use this theory better than you can use the Wyckoff. It's a very simplistic way of seeing everything. So let me just mark everything down here. Okay, price tends to generally push up like this, and then every low that you see and every break that you see, price pushed off because it created in this area, this lower high, it created a form of a Wyckoff theory, right? A Wyckoff schematic, and pushed price up. But it also created a reversal from this low. So now when there's a high here, price has to come back to it eventually, mitigate this last, you know, the last up move here, because the last down move, because price was going on a down move here, on a downtrend, and price breaks off all of a sudden. So it has to mitigate this last order block here, which I'm going to go show you guys a little more in depth in a few minutes in a second. So hold on for 1 second. But so when price is pushing up right here in this area, we have to see the change of character like this. Okay, now you can see the change of character. We had a low broken, we had a high broken. Price has to come and mitigate and start pushing back up like this, breaking the next high. Okay, now every lower high that you see is a potential CHoCH, okay, because price always pulls back very deeply like this, and then breaks above a high, and then comes back down to the low right here, and then starts to push price up like this. Okay, so let me go show you guys how this is, how you guys can see this. Okay, let's even go here on this little range here. You can see here, we're still, like, if you look at this, if we zoom out, price is going on an uptrend still, right? So if we were just to use this information here, you can see plenty of opportunities to use the CHoCH. So let's say, for example, price is pulled all the way back here, right? You can't really tell that this is the potential order block. I mean, I can personally, because, and I'm going to show you guys why this is the potential order block. There's many of them. In fact, here's one, okay, and here's another. The reason why this is the potential order block is because this is where the last low, this is where the last high is, right here. Okay, but normally, or look at this very closely. Price broke below this area. There was a range in here. Okay, then price broke above this high right here, and price started just to shoot up. It never tested or never mitigated this area. So this gives us a sign, an area where price should come and test. And then lo and behold, if you put your zone here, look where price tests, and price starts to push up. Now let's zoom in here. When price does get here to this order block zone, do we enter right away? No, we don't just enter right away. I mean, you can. You know, if this is proven here, if this area here is proven that it is indeed, in fact, a CHoCH, then you can just start entering here. But this is, I'm going to talk about risk entries and confirmation entries later in another video. But in this case, I would enter right here right away. I would wait for another potential CHoCH. Let's look at this here. Let's zoom in closely. If you mark this low here and right here, it broke this low, right? So this is a CHoCH here. Okay. And now let's see where this high, where this low was broken, where the last high was broken. If you see, oh no, not right there. Sorry, it would be right. Actually, it's this. The wick doesn't count. So it'd be this high, because the bodies. It's where the body closes. It closes this. It closed at this high, right? This is where the buyer's closed. So there's a high and a low broken like this. And then if we're patient, we can just wait for markets to come back to the order block that wasn't mitigated just yet, right there, and there would be your entry right here. So now we can enter again, right? Let's look at it again. We have another break below, and we have another break above, right there. Okay, where would the next entry be? Right here. Look at that, price tests. Okay, and you can also do, in fact, I can also see that there's liquidity right in this area that price created. So you would have been stomped out on this one, obviously. But then there's another area you can have entered right here based off of the order block, the untested order block. So you would need to see if we should enter from here. We would look at this area now and see right here. There's a low being broken. Right there. There's a low. Let me mark this out correctly, right there. And now we have a high broken here. Alright, now where's the best area to look for buys? Well, let's see what broke this high. It was this information right here. This is what broke the high. And there's some naked candles right there. There's your next buy. Okay? Right there. Now I'm just showing you guys, you know, obviously we're in a huge range here. I'm not just saying to trade any range, right? And it's not a trend by any means, right? Because you can see the highs aren't broken and the lows aren't broken yet, so we're obviously in a range here. But had this been a trend, which I'm going to show you guys in a second, we could look to, you know, obviously continue buying off of CHoCHs right here. But as you can see here, price did test the order block here, and price did push up. If we were on a we're on the 4 hour now. Let's go on the 15 minutes so you can see how these entries would have played out just perfectly. Okay, we had a break of structure here. We marked our order block based off of the higher time frame CHoCH. Alright, and then this would have tested well. You can clearly see in here you could have just entered right away. You would have had a pretty good R&R right there. Let's look at another example here. We had another area to look for buys here. Could have bought. You might have made some profit and maybe break even on some of them on this trade, maybe, or maybe take partials. But here you could have had another great entry, You had a CHoCH below and a CHoCH above. Here's the area for the order block. You could have entered here. Let's look again. We have another break below, another break above. Here's another area to enter, right? This keeps going on and on and on. We have another area, a break below, and another break above. Where's the entry? Right there. Right there, right? And that's extended. Look at that. Boom, and enter, right? You can also look at it again here. We have another break below, another break above. Where's the next entry? It's right here. Okay, right there. Okay, you look to enter, and the price goes up. Okay, it's that simple. All right. So let me just show you guys kind of on a trend how this works. All right. What am I doing? Let's go here. All right. So let's say you were here at this point, right? And the price, if you're zooming out, price is just going in upwards direction here. You can clearly see here again, price broke below, broke above. Here's your entry point. All right. You can see price broke below, price broke above. Where's your entry point? Somewhere in here. Okay. Price broke below, price broke above. Where's your entry point? Right there. Here's your order block right there. Okay. Let's look at it again. Price breaks below, price breaks above. Where's your entry point? Right here. Let's extend it from right here to right here. Oopsie, is that correct? Let me see. Right there. Come on. Okay. It would actually be this area right there. And it doesn't even touch. But you'd watch how price is reacting to off here, right? You can see here easily there's a break below, there's a break above. This wick broke this high, so now we can clearly tell that this is an area for buys right in here. Although I can see that price did take out liquidity, and the price started pushing up. Okay, so there was nothing here. You can see it here again. Price breaks below, price breaks above. There's an area for for you to buy. Okay. Price just goes on and on and on like this. There we go. And there's your entry again. Okay. It just does this all the time. If you zoom out, obviously, you'll see a bigger CHoCH here and here. There should be an entry right. Okay, we entered here. You can see another entry here. You could also see another one. Let me see. It was this low and this high. Oh yeah. Okay. So it was this low and this high. These are the major swings that are breaking. Okay, there we go. So there was a low and there was a high broken right here. This low broke, and then it also broke the high of this area. Now if you zoom out, look where the market comes, right into your order block. Right at an area where you could have bought, right there. And price started shooting up. Okay, we'll talk more about structures later, but just to show you guys how this truly works, it's an amazing way of trading. So this is why you guys don't really need the Wyckoff. The Wyckoff, I think, is just a waste of time and pointless for many reasons, because it just confuses you at the end. You can see here, price broke above, price broke below, right there. You can see that clearly this was your sell. All right, and then price breaks below again. Actually, right here, price breaks above. Sorry, right there, price breaks below. Here's your entry. Okay, price breaks above, price breaks below. Here's your another entry right in here. Okay, here's your price breaks below, price breaks above. Here's your next entry. Your entry should be in this area. And obviously this move here is taking out the liquidity right here. So here's another entry from this point right here, obviously. And then you had another high, another low being broken. So here you have another entry. Okay. And obviously, as you can see here, price just continues to range. It's just ranging here. So this would have, obviously you would have been taken out on this move here. But there's ways to know and understand how price actually, when to know if price is going to shoot up above like this. and that's for a whole nother other video. But this time, guys, I hope you guys understood what I was trying to say. I was really trying to convey as much as I could to show you how price works here, that you guys don't really need the Wyckoff, you guys can just use the CHoCH. But more on this later on another video. So without any further ado, guys, please give me a thumbs like on this video, big thumbs like, a big like, big thumbs on this video, a big like, whatever you want to call it. And I hope you guys learned a lot. If you guys have any questions, please leave some the comments below, and I will be releasing a course very soon, probably I think within the next 2 or so weeks as we're speaking. So thank you guys. Have a good day.